All right, guys. Well, happy Monday. I am not in the office, as you can tell. Let me unblur my background, and you can see that I'm in a car. So we are sponsoring the local Mortgage Bankers Association golf tournament, and so I scooted over from our whole sponsor, jumped in the car, and we'll get our update call done. Um, as a complete aside, if you all, and I don't know how many people have this, but if you realtors, if you don't have Wi-Fi in your car, it's a game changer if you do. One of our coworkers and I were driving back from an out of town trip, and he's an old car sales guy, and so he knows way more about cars than I do. And we were trying to operate off hotspots, which was really slow and frustrating. So I pay $27 a month. And it runs through OnStar, which is 15, and another 12, I think, through AT&T maybe. But $27 a month, my car basically has its own Wi-Fi. It's incredible, like as fast as my office. Um,
Oh,
like I can be in spots where I have zero cell service. I can jump on my laptop and get online, and I can like call through my like VoIP, phone system. Um, so realtors, if you don't have it, certainly something to look into. Some of you guys are probably like, Mike, that's been around for years, but others are probably like, never heard of it before, like I was, 6 months ago. So anyway, so I'm doing this with great cell coverage literally for my car. It's really cool. Um, okay, so probably a little bit quicker call today. The big news, obviously, of the moment is what happened overseas in Iran this weekend. And I just wanted to talk to you guys about what I think will happen, what is happening. Um, and I think more than anything, in times of uncertainty, we have to kind of calm our clients down and let them know that everything's going to be okay. So I'm going to be a little bit um, chart heavy today, but more like interest rate charts. So I'm going to share my screen here and we will dive right in. Okay. And then I'm going to ask some questions too, just curious to get some feedback. So do you guys think that the markets anticipated the possibility of something happening overseas? Like, do you all think that it was expected or was it a little bit of a surprise? Okay, so we've got a yes, a one yes that was expected. So what's everybody think? So did the market expect it? And so we got a couple expected. And so I completely agree. The president, whether you're pro or anti-Trump, he pretty much tells you what he feels, and things
mhm.
tend to be a little bit telegraphed,
Yeah,
right?
this is Christina with
And
EXP.
and so the market, I think, anticipated this happening. So the impact of the initial strikes over the weekend, certainly there's an impact, but it's an expected impact and an anticipated impact. What remains to be seen is how long does it last, and we'll kind of talk about that. So here's what's happening in real time. So this is mortgage bonds. So we're off 29 basis points on the day today. That's a decent movement. That's,
Hmm.
an eighth in rate, maybe not quite, but certainly a movement higher. If we look at the charts here, we're still on a positive upward trend. You can see where we are today, kind of gets us back to where we were like a week or so ago, right? Like on the 20th, um, 19th, which was like, a week ago Thursday. So we're pretty close to where we've been. We had a few good days at the end of last week. You can see here the bond market improved a little bit, sell off today. The important thing for us is this red line here. Okay, this is the 25-day moving average. The black line's the 50-day moving average. Anytime there's geopolitical uncertainty that could impact oil production, that could cause oil prices to go up, that's certainly going to cause the bond market to sell off a little bit. And so that's kind of what we're seeing today. A little bit of a sell off. Um, Not unexpected. The market, like I said, anticipated it. As long as these support levels hold and bond prices stay above this, then it should be more or less business as usual. You're not going to see a spike in interest rates. We've been on this nice rate kind of trending lower run, affordability improving. That shouldn't end as long as we stay above these. And so, that trend line is important. You can see that if we look today, the bond market sold off and stopped right on this support line. So that's positive. Um, on this call, I don't often show you guys the 10-year treasury. We talk more about mortgage bonds. The 10-year treasury, is something that mortgage rates are very, very directly correlated to. This chart is the inverse of mortgage bonds. So on the other chart, green going up means up in bond prices, down in rates. This chart is the opposite. So red in this chart is good. Red means the 10-year is going down. And you can see for the month of February, the 10-year treasury went from about 4.25 down to 3.95. That 0.3% drop in the 10-year treasury in February corresponded to about a 0.3% drop in mortgage rates. That's why we had a nice run in February where rates came down. A lot of the media was picking up last week, like some national averages kind of went sub six, kind of a hot button headline that the media ran with. Um, so what's happening today? The 10-year is up and it's up 8 basis points. Okay. So to make it as direct as possible, if the average interest rate last week was 5.98, the average interest rates today might be 6.06. So less than an eighth of a percent movement. So again, what happened overseas, the impact on it today, while there's an impact, minimal, somewhat muted. Um, and again, we just want to stay below these trend lines here, which are positive for us. But market's selling off a little bit. So now longer term, here's what we really have to watch. So I'm going to post this chart here in the chat for you guys. And this is just a direct link to oil prices. So we talk about oil a lot. And we talked about when President Trump first took office last January, they did some things to increase oil production that would cause the supply to go up and then therefore cost of oil to go down. That's good for inflation, good for interest rates. So what we've got to watch this week is, does oil surge? Over the weekend, the oil futures were up 12%. By the time the market opened, that's tamed out a little bit. So oil's up 6% today. So not bad. $71 a barrel, again, not bad, especially after the run that we've been on for the past couple weeks. Um, again, as long as that's all the damage that happens. And so for the rest of this week, what should we be watching? So you hear of like the Strait of Hormuz, which is on the eastern coast, like kind of between like the UAE and Qatar and Kuwait, um, and Iran. That strait, 20% of the oil of the world's oil production passes through there. It's international waters. Nobody owns it. But if you're a oil, company, American or international, do you want to send your oil tankers through there when missiles are flying overhead between Iran and, the Middle East? Probably not, right? And so the quicker that control of that area can be solidified and kind of the safe transport of oil can resume, that'll limit the increase in oil prices. But if that area is closed for a period of time, then you could see oil prices elevated. So that's certainly something close to watch. Um, there's all kinds of stuff on the internet, much of which is inaccurate. If you scroll through Twitter or X this weekend, I'd see something posted. I'm like, oh my gosh, that sounds like big news. And it was like, well, let me actually research this a little bit and see if it's legit because there's a lot of stuff from a lot of unverifiable um, sources getting posted on the internet. Um, but like I saw that a missile hit an oil refinery in Saudi Arabia. I think it's accurate, but I'm not positive. It was just driving into, work this morning. So we have to watch oil this week. And if tensions not necessarily de-escalate, but if the flow of oil out of the Middle East continues, then that's a positive for us. And so I think what the market expects is quick action, kind of like we saw with Venezuela, um, and hopefully a quick end. You've heard the president talk about hopefully this is done within a few weeks. If this lasts 2 or 3 weeks, I don't think the markets will be terribly upset by that. Like, and by upset, I mean like, volatile and, oil going to $100 a barrel or something crazy like that. But that's what we've got to watch is how quickly does this thing resolve itself? Um, I think, if you look at Trump's history, and again, he's a very public figure. He was a very, very big Iraq War critic. And that's, I think, what a lot of people, especially Americans, look back to like, oh gosh, is this another, war in Iraq that drug on for years and years and years? Trump was a big Iraq war critic. I don't think he has any interest in getting into a prolonged conflict like that, um, both for personal reasons and also we also talk a lot about it's an election year. It would be very bad for him and Republicans in an election year to be in a prolonged conflict. And so I think the goal is for this to resolve itself very quickly. Now, when military conflicts arise, you can't just snap your fingers and say, yeah, we're going to be done in 3 weeks. Like, right? You can't predict that, but I think that's the goal. So, um, if we're watching the markets, we have to just watch how quickly this is going to resolve itself. If it does, I don't think you're going to see a big impact on interest rates. Um, but if it lasts longer and longer and longer, and oil production gets pulled back down, and the cost of oil surges, then there would absolutely be an impact on mortgage rates. Inflation would spike, affordability would be hurt. We'd probably have buyers that would slow down their home search process. Not that an eighth or a quarter% higher interest rate would really affect them, but more just kind of the perception of instability. And I think, what our clients are really craving in most cases is stability and certainty. Um, and so a quick resolution to this, I think, would help with that. Um, I've got the Fed chart up here too. I just wanted to share this. No real changes, and they actually were updating this a little bit this morning, but like the action over the weekend, 97% chance there's no Fed rate cut at their next meeting this month. So the markets are basically taking this as, okay, we expected this to happen, and we'll give it, a period of time, whether that's, a couple days, a couple weeks, until things can change. So what we got to be watching is just how quickly does this resolve itself, and certainly every single one of us has the data and information and news sources to follow for that. Um, Back on the chart, so the 10-year chart, if we can stay below like 4.05, 4.1, that's a really positive news. That's where we were about a week or two ago. And so the damage, as far as interest rates would be pretty minimal. Um, the next couple days will be dominated by geopolitical news in Iran. At the end of the week, we do get a monthly jobs report. So if I go to the economic calendar here, um, not a lot of news this week, um, but we do get the jobs report on Friday. And so that'll be a big market mover as well. But everything's going to take a backseat to what happens overseas. So I'm going to let you guys off early today. If you weren't on the beginning of the call, we're sponsoring an event. I had to run to my car to jump on and get the update out today. So um, not a lot of news except for the big news. So watch that this week. We will try to do the best we can individually to update you guys as the week progresses if we see any market movement. And then we'll certainly be talking about this more next Monday. Appreciate you guys jumping on today. Have a great day. Have a great week. And we will see you guys next Monday. Thanks, everybody.